The Bank of Canada just got handed the worst GDP numbers in nearly 2 years, and I'm about to tell you exactly what they're going to do about it on September 17th. This is not just speculation. The data tells a clear story, and I've got a rate prediction that's going to impact every mortgage holder, home buyer, and investor in the country. But first, let me show you the economic bomb that just went off. Canada's economy just shrank 1.6% in the second quarter of 2025. That's almost 3 times worse than what economists had predicted. Our car exports, they absolutely crashed, down 25%. But here's the part that doesn't quite make sense. Nationally, Canadians are still out there spending money. They're still buying houses. Construction is still happening. It is literally like half the country did not get the memo about recession. What we've got here is basically 2 different Canadas. Some parts of the country are getting hammered right now, while others are doing just fine. And this puts the Bank of Canada in a very interesting position. Think about it. They want to help these struggling areas by cutting interest rates. But if they do that, they might accidentally overheat the economy again, and hello, inflation. So what's a central bank supposed to do when half the country needs a boost and the other half needs to cool down? Well, here's my prediction. The Bank of Canada will cut rates on September 17th, and I'll say that I'm about 75% confident about that. Why do I think they'll cut? It comes down to 3 factors that paint a clear picture of where Canada's economy is heading. The trade war reality check. The Bank of Canada has been crystal clear. Broad-based tariffs are hurting Canadian exports, pushing up prices and hitting key industries hard. We're talking about 3/4 of Canada's merchandise exports going to the US. That's almost 1/4 of our entire GDP on the line. When exporters face less demand, they cut production and lay off workers, which creates a domino effect throughout the economy. The bank needs to act before this becomes a full-blown recession. Secondly, the GDP contraction. That 1.6% economic contraction in Q2 gives the Bank of Canada the political cover that they need to cut aggressively. No one can accuse Governor Macklem of being reckless when the economy is literally shrinking. The bank was forecasting export growth of 2.5% in 2025 before the trade war. Now they're dealing with the complete opposite. This isn't about preventing inflation right now. It's about preventing economic collapse. Third, the manufacturing emergency. Tariffs are upending production at auto assembly plants and raising costs across the manufacturing sector. Thirdly, the manufacturing emergency. Tariffs are upending production at auto assembly plants and raising costs across the manufacturing sector. These are not just numbers on a spreadsheet. These are real jobs, real communities, and real factories that could shut down permanently if action is not taken quickly. Key regions like Alberta's oil and gas sector face 10% tariffs, while manufacturing heartlands in Ontario and Quebec are getting hit from multiple directions. Every month of delays means more permanent damage to Canada's industrial base. I'm calling a 25 basis point cut, bringing the bank's key interest rate from 2.75% to 2.5%. But honestly, I wouldn't be shocked if they go bigger, maybe 50 basis points, because the trade war damage is happening faster and deeper than anyone expected. Some analysts are already predicting a 25 basis point cut, but given the severity of the export shock, the bank might need to do more aggressive cuts to prevent a deeper recession. Before we go any further, let me know in the comments, what do you think the Bank of Canada will do at their September rate meeting? What does a potential rate cut mean for variable rate mortgage holders? Variable mortgage rates are directly linked to the Bank of Canada's key policy rate. So homeowners with variable rate mortgages will benefit from lower monthly payments after any rate cut. Analysts expect the Bank of Canada to cut the overnight rate at least twice more in 2025, which would decrease variable rate mortgage rates by at least another 0.5%. If the Bank of Canada cuts by 25 basis points in September, bringing the policy rate from 2.75 to 2.5, variable rate mortgage holders will see an immediate reduction in their monthly payments. Some predictions suggest rates could reach 2.25% by the end of 2025, which would mean even more relief for variable rate mortgage borrowers who have endured years of rising payments. And on the other side, we have the inflation risk reality. Here's what makes this interesting. Canada's inflation rate dropped to 1.7% in July 2025, down from 1.9% in June. The Bank of Canada targets 2% inflation with a range of 1 to 3%. So we're actually running below target right now, but there is a complication. While inflation is close to 2%, underlying inflation has picked up, and the Bank of Canada is watching how trade negotiations and potential new sectoral tariffs might affect prices. The trade war could push prices higher even as the broader economy weakens, creating the nightmare scenario of stagflation. For variable rate holders, this creates an interesting dynamic. You'll likely get relief in the short term, but if trade tensions escalate and push inflation higher, the bank might have to pause or reverse course faster than expected. The relief you're going to get now might be temporary if inflation pressures build later in the year. The math might be getting easier with potential rate cuts, but the fundamentals have not changed. Don't let the promise of lower rates push you into a home you can't afford or make judgment calls that might not fit your situation. Markets are unpredictable, and what goes down can go back up. If you are thinking about buying, renewing, or refinancing, focus on what you can control: your down payment, your equity, your job security, and your monthly budget with some cushion built in. A rate cut doesn't fix an overextended household budget, it just makes it temporarily more manageable. And remember, we are in uncharted territory with this trade war situation. Economic conditions can shift very quickly. So there it is, my prediction for September 17th and the Bank of Canada on what they are going to do. Again, I am incredibly curious about what you, the viewer, is thinking. Are you expecting the Bank of Canada to cut rates right now or hold the line, maybe even reverse course? Let me know in the comments, and if there's anything that I have missed. If you enjoyed this video and would like more content like this, please consider liking and subscribing to help us with the YouTube algorithm. And if you love this video, you're gonna like this one as well.